Finance Broker Forum. I hope you are all well and having a beautiful weekend here in Perth. As you probably can't see it, but we're having a beautiful Sunday, a very, very sunny Sunday. And I think the week is going to be quite nice as well. I think we have 21 degrees forecasted for the rest of the week, which is really, really nice. So getting sick of the rain and the cold. All right, guys, so what I wanted to do today is to talk to you about interest-only loans. All right, it's the talk of the town. Everyone is getting quite confused. There's a lot of misinformation. So what I wanted to do today is to talk to you about interest only, what it is the difference between interest only and principal and interest, what is the ultimate cost of that type of strategy, and compare everything. As you can see, I'm using a brand new whiteboard and because I want to show you some numbers, so hopefully you bear with me. All right, so let's get started. What is interest only? First of all, let's have a look at a typical loan, and I'll draw a chart, simple chart, where here are the dollars, here's the time, and the typical loan term is usually 30 years. Can you read that? Yes, I think you can. All right, so let's take an example. Let's just imagine that you have a $500,000 loan, it is your loan, that your rate is a 4%, and that, as I said, the term is 30 years. So what does that mean? Let's compare the repayments. If we look at a principal and interest repayments, per month, the repayment would be $2,387. Okay, so that's what you pay every month for your loan of $500,000 over 30 years. Now, what does that $2,387 actually entail? It entails $720 of repayment of your principal. But basically, that's the advantage of having a principal and interest repayment, is that with every repayment, you pay off some of your loan. And the idea is that if you start here at $500,000, the idea is that over 30 years, you pay off your loan down to zero. Okay? Now, principal is $720, and your interest is $1,667. All right? So the total here is your $2,387. All right? So for every repayment, you actually pay $1,667 in interest. With the first repayment, that interest is going to reduce as the balance of your loan reduces as well. So what does that mean when we talk about interest-only loans? That basically means that all you are really doing at this stage is paying your interest. So really, your repayment is $1,667. Okay? So obviously the attraction of that scenario is that you don't pay the principal, and therefore your monthly repayment is a lot lower. The difference, though, is that you are not paying off any of your principal down. Okay, so that really, just have a quick look. The difference between the two, is I can't remember. The difference is $720. So it's basically $720 cheaper every month. Now let's have a look at a 5-year interest only scenario. So what happens in 5 years? Imagine that is 5 years down the track. All right, so bear with me. So what happens in 5 years? Your loan is still the same. So it hasn't moved. So you see there's a big gap here, but principal and interest repayment, your loan goes down. With an interest only loan, your balance doesn't go down. So really, after 5 years, interest only, you are still at $500,000, whereas with your principal and interest, you are down to $452,237. All right, so it means you've already paid almost $50,000 of your loan down, and that's a big difference. Now, what does that mean in terms of cost? Let's compare that. So, overall, with the principal and interest repayment, the interest that you pay over 30 years is But let me just get, it's $359,000 and $340. All right. So that's how much interest that you pay over that whole period here. Now, what happens with a 5-year interest-only loan? That reverts back to principal and interest after 5 years. The first 5 years, so interest only, for the first 5 years, all you do is pay interest. And you're actually paying, at 4%, you're paying $20,000 worth of interest every year. So after 5 years, 20,000 times 5, you've actually paid $100,000 worth of interest without paying any of your principal down. Now, once you revert to principal and interest, remember now you have 25 years to pay off your loan. The interest that you pay over that period of time is $291,755. That means that you've actually paid a total of $391,755 in interest. That is a difference now with the strategy of only paying principal and interest over 30 years versus 5 years interest only, then 25 years principal and interest. The difference is a whopping $32,407. So in other words, the strategy of having an interest-only loan for 5 years and then reverting to 25 years in principal and interest is costing you $32,407 more in interest. What people don't realize either is that after the 5 years, when your loan actually reverts back to a principal and interest, you now have 25 years. The difference here, you have 25 years to pay it off. What does that mean with your repayments? That means that now your repayments on a principal and interest basis go up to $2,639. All right? And the difference between the two, that's over 25 years versus 30 years, is $250 per month or $3,024 per year. All right? So that strategy, after 25 years, is costing you $263 in repayments for the 25 years. Now, what are the advantages and disadvantages of having an interest-only loan? Let's start with the advantages of an interest-only loan. First of all, as we've already seen, the repayments are lower. Now we've seen there's about, what did we say, about $720 difference in repayments. The other benefit, if you are getting a loan for investment purposes, in other words, generating income, then there are some tax benefits. But remember, if you're buying a property for your own use, there are no tax benefits. The other one, obviously, it helps you manage your cash flow. For example, if you own a rental property, paying interest only means that your repayments are lower, and therefore you got more money available, and your cash flow will look better for a little while. So you can manage your cash flow. And the other major benefit is that you can redirect those funds. You can redirect your funds to, for example, helping pay off your principal and interest loan on your owner-occupied property faster. Remember, in our example, there was a difference of $720 per month in repayments. You can actually use that money to pay extra on your existing principal home loan. Or you can use that money as a way of saving more money for a deposit on the next property, be it owner-occupied or investment property. Now, what are the disadvantages of an interest-only loan? Obviously, the main one we've already said, it's more expensive. Long term. No, total interest that you pay is bigger. In our example, it was over $32,000 more over that same 30-year period. The interest rate nowadays, in this climate where the regulators want to cap the percentage or the portion of interest-only loans to 30% of all the loans, rates have actually gone up So if you wanted to do, whether it's variable or whether it's fixed, whether it's for your investment property or for your owner-occupied, there is now a difference if you choose a rate interest only versus a rate principal and interest. And another, obviously, another disadvantage is that it's harder to get to be approved. Now, as a broker, I can see that I need to give the bank a very good reason to go with an interest-only loan. What I see is obviously there's actually a difference between an interest-only loan for an owner-occupied versus an interest-only loan for an investment property. At the end of the day, it makes a bit more sense to go with investor loan interest only, just because of these advantages. One, there are some tax benefits, there are some cash flow benefits, and allows you to redirect those funds on your owner-occupied property. And I mean, really frankly, in this environment, if someone comes to me and say, I want an interest only on an owner-occupied, I would ask the question why. In the past, some of the reasons that were given is, well, I can't really afford the principal and interest repayments. I would like to go interest only for a while. I've seen some situations where there is a good reason for a first home buyer, for example, not to get a brand new loan. It's very new. They've borrowed a lot of money, and to help them for a few years, getting used to the repayments, it might be a reason to go interest only. But really, what I would suggest is that you have a chat to myself or to another broker, and to really understand, is interest only loans really for you? Remember, there are some benefits, there are some disadvantages. It makes a difference whether it's investment or not investment. Have a chat. Let's see whether it's the right strategy. And yeah, that's it for today. Thank you very much for listening. As I always say, if you got any questions, leave a post down there, or call me directly on 0412 022 110. Thank you. Bye.